Well, I am really looking forward to this conversation because we have two of the OGs of retail. Billy May.
Wait, is that a good thing or bad?
Billy, that means
about
old.
It's a euphemism.
Yeah, with the emphasis on the O, as I said. Actually, folks that have been on the pod before, coming back together again for the first time, I guess we could say. David Katz and Billy May. Welcome, gentlemen.
Thank you for having us.
A pleasure to be here, as always.
Well, we have a lot to talk about, but one thing we should talk about, because we are all about shameless self-promotion, is that all four of us are NRF top voices. Now, I was informed by our insurance company that the four of us are not allowed to be together. So hopefully
we can't fly together. That's
we can get out of here before they discover that. But I'll tell you what. Why don't we come back to that? We'll just start first of all by letting people know who you are and what you do. So, Bill, you want to talk a little bit about your professional, personal journey in 24 seconds, if possible.
24 seconds. So I'm the CEO of Brooklinen. We're a leading home essential direct-to-consumer brand. But my background, I'm a fourth-generation retailer. So I was born and raised in the business, started my career as a merchant, got bitten by the digital bug 25 years ago, worked for some iconic global brands.
You've been a few places listeners may have heard of.
I have.
You want to drop a few names?
Abercrombie & Fitch, J. Crew, URBN, Adidas. So some great brands driving a lot of digital transformation.
Did you leave Adidas because you didn't pronounce the brand correctly? Or
in the States, certainly correctly. Internationally, no.
Yeah. All right.
That was subtle.
Yeah. Excellent. And David, how about you? David J. Katz.
J. Katz. Yes, thank you, Steve. My journey is obviously a very clear linear path, not as many stops as Billy. I started as a neuroscientist, and that was my undergraduate and some of my graduate background.
So you're not a rocket scientist.
I am not a rocket scientist.
But you maybe could have been a brain surgeon?
I was headed sort of in that direction. When I was 7 years old, my family tells me I stood up on a dining room chair and announced I wanted to be a doctor, and they went, well, last week you wanted to be a firefighter. I went, no, not just any doctor. I'm going to be a brain doctor because all of you are really weird, and when I grow up, I'm going to fix you. So, but that does lead to today understanding why consumers behave the way they behave and how to influence that. So it's somewhat of a clear path. And got into family businesses, kind of like Billy, and then went to business school, specialized kind of in direct marketing back when it was print and catalog, which really kind of leads today's e-commerce and social selling and I guess generative selling now and some other processes. And I am an executive vice president and CMO at Randa Apparel and Accessories, and most of your listeners do not know what that is, but virtually all of them wear some of our products and own. So we make a lot of accessories and clothing, men's, women's, kids, and interesting journey. A pretty big business.
And you've been there a while.
I have been there a while before I looked like this. Yes.
So,
well, let's tap into some of this ambitious wisdom about understanding people's brains. It's a nice segue. You know, we all want to be customer focused. We all want to understand where the customer is. We could talk about there's many customers. How do you think about that? How do you approach that? Where do you begin that journey? This question I'm going to ask both of you because you both have such different interesting perspectives but on the same industry. But what's your starting point and how are you thinking about it? Like, what's the trade craft?
I think that digital analysis and data is a great way to understand behavior, but it's not the best way. The best way has been somewhat abandoned and lost, in my view. It is when great merchants, marketing people, designers go out onto the selling floors of stores and watch customers and engage with them. I would think, Billy, that's family lore, but there are some great training programs out there, but nothing beats being out with your customers while they're shopping and talking to them.
It's funny. I remember we were talking back in the time tunnel, Hudson's Bay, that we should hire anthropologists because it help study that behavior in the wild, so to speak.
I had the pleasure and privilege of working with a cultural anthropologist who specializes in retail shopping named Paco Underhill.
Yes,
yeah,
Paco.
yeah.
Legendary.
Okay, the legend.
Yeah,
He's been amazing.
Yeah.
And that's exactly what he does.
Yeah, the butt rub, the butt rub,
The butt rub, the
butt brush or whatever.
how close those aisles are,
Yeah,
putting geriatric medicines on lower shelves with small type and hard to open packaging. You know, evidently that's not the best practice for selling that product. And
Billy, what signals are you watching? What do you pay attention? There's so much signal and noise. What do you pay attention to?
Yeah, I think there's like what's changed and what hasn't changed. I mean, what hasn't changed, consumers still want value. They still want ease. Trust more than anything is critical these days. And really brand and emotional drivers are critical. But when you think about like what has changed, they have less patience. They make decisions much faster.
Is that an attention span thing, do you think? Like the patience, is that anxiety or just attention span?
I think it's attention span.
I think it's technology driven.
100%.
They have the ability to make these
100%.
fast because they've got more information faster and faster delivery.
Well, they're also trained that way by the platforms, right? Consume more.
And this is why I think the element of trust is so important, because consumers today just have a lower tolerance. They're more impatient. Their expectations are higher, and if you can't deliver on your promise, if you can't deliver on that trust, they'll move on to something else very, very quickly. And so the margin for error is much narrower, and brands have to be more responsive more than ever, which gets back to consumer behavior, and it's more and more difficult to keep up with the pace of change.
Sure.
Consumers are adopting at a much faster rate than retailers or brands are able to respond.
Let's talk a little bit about, because you kind of tease this out, and I know value is a big phrase. I think you don't sell anything unless you deliver value, so it's the definition of value. But in this particular case, I really want to talk more about price. And a lot of people talk about this as the flight to value. Michael likes to call it the stampede to value. But as I'm sure you're aware, even though there are clear pockets of success on the high end, the vast amount of growth going on in the industry is being captured by Amazon, Walmart, Costco, TJ Maxx, dollar stores, et cetera, et cetera, et cetera. Oh, since you both have worked across price spectrums and seen lots of things, what do you make of this? Is this a moment in time because of economic anxiety? Is this some sort of fundamental shift? So discuss amongst yourselves.
I don't know that this is unique. I think value has always been a driver for consumer behavior. It's a matter of what does the customer value. Price is only one part of
Sure.
the value equation. And what I see more of is people have different values at different contexts, at different times
Right.
of their shopping and purchasing experience. We now find the same customer, exact same customer who's buying from some of our products at Macy's, is also buying from Marshall's and Costco and occasionally Walmart Marketplace. And if they, depending upon where they live, they might stop by Tractor Supply with their 2,400 successful stores. So I think what they value in some cases is convenience, speed, service and information, and price. They are more discerning. They make better educated choices.
And there's a lot more information available to make that
information,
decision,
but I
right?
think value has always been a key driver. It's just the way that they value it, and traditionally we've bucketed them as this customer values this. Well, in what context?
Yeah, exactly.
And I 100% agree with what David said. You know, value it's not a new definition of value. It's and consumers didn't universally trade down. They traded what I would say is towards confidence. And value means different things in different contexts. So in tight moments, price is really important. Quality when replacement risk is high. And then when you think about reliability, when things are chaotic, especially during, the rush of the Christmas and holiday season. And so I think value is not just a single positioning anymore, because
Right.
it really is contextual. And, if I think about Brooklinen in
Yeah, I was
my
going to ask
company.
specifically about, if you sell products that presumably are meant to last, it's not a consumable, right?
That's
so
correct.
then people may very well say it's worth paying a bit more because I'm going to enjoy it for a long amount of time. It's going to last a long time. Sorry, I didn't mean to interrupt you.
No.
but, yeah.
That's 100% spot on. I think that's where value is contextual. And that's where quality is important.
Yeah.
Because it's, are you providing something that is of such high quality that I value that and therefore I'm willing to pay for that. And that's where the reliability and that's where consumer trust comes in because they trust that you're providing a quality product and therefore I don't need to trade down, quote, for a cheaper product. And so what we say is value isn't cheaper, value's clearer. And I think that's what the consumer is demanding is clarity around the value.
Yeah.
I think clarity's a great point that Billy just made. We have 35 licensed brands and half a dozen owned brands. The licenses are deliberately chosen for different value propositions and different contexts. So we're going to sell a Levi's product at a brand premium to a certain customer at certain times, or Calvin Klein, or it might be Williamson-Dickie at a Walmart, right? Or somebody else at a Nordstrom, or is Saks still in business today?
What time is it?
Yeah.
So, different brands, different retail
we
channels,
laugh.
and different
We
different
kid.
times. Sorry, didn't mean that. We love all of our retail partners equally.
It's interesting. I want to dive a little more into pricing strategy because I often think of it. There's a very, very big segment of the consumers that I call the cash flow consumer. They run their lives like they just have what they have. They don't care about if this is going to last how many years. I just need it today. Even in consumables, right? I'd rather buy it at the dollar store, smaller format, because that's all I can afford, even though per ounce it's like 5x
Right.
what I'd buy at Costco. But let's really get into
But
pricing.
Michael, I want to say one thing on that.
Yeah,
That's, if I can. One of the things we found recently when we're studying customer behavior in the stores, talking to them out there in the
Novel
real world,
concept, novel concept.
is that one of the key drivers for value and brand is I've never heard anything bad about that brand.
Huh.
It's not always, I love that brand, I'm going and driven. It's, there's the, I need confidence I'm not making a bad choice.
Right.
Interesting.
And it's like, I'm not sure which one to do, but I certainly don't want to do something wrong.
Right.
And that can apply even to fashion.
Absolutely.
So, I'll give you an example, okay? Billy and I do a lot of talking, as you guys do on stage, and what are the best denim pants to wear at a given moment? Different times, different place. It's never wrong to wear a pair of Levi's. And not that I'm pushing Levi's, but you're safe. It's not a bad choice.
Right.
We used to say, I worked at Levi's. We used to say timeless and timely.
Yeah.
Both
Yes.
fashionable and ready to go. Speaking of timely, let's talk about pricing strategy. These are dynamic times. You've got, we may or may not have another tariff coming on today, according to the news. But you've got all that. You've got the ideas of dynamic pricing. You've got shifting supply chains. How do you approach strategically pricing? Because I think from the outside into the industry, it's like pricing just happens. We look at what everybody else sells at it, or we build it up. But it's a very strategic element of what you do. Yeah.
It is, and I think pricing was what happened behind the scenes, and then tariffs happened, and so now pricing is certainly front and center for every executive, and it's a topic at board meetings and conversations. And you talk about margin certainly, but pricing strategy and having clarity around price architecture is at foremost of most strategies and strategic planning today. And so whether it's tariffs, whether it's logistics, whether it's geopolitics, all of it has to come into consideration. And so I think coming back to trust and confidence, as David said, you have to give the consumer a reason to buy your product. And consistently promoting it or raising prices kind of silently behind the scenes erodes trust and erodes confidence. And so our belief is you got to give the consumer a reason to want to buy your product if, let's say, pricing is going up or raw materials are going up or sourcing prices and inputs are going up. How can we redevelop the product in such a way that you're giving the consumer a reason to want to buy your product again, not just because it's on sale and you took the price up and you took it down? And so there's this element of, pricing has moved from the finance world to the leadership space. It is a topic of conversation. We talk about it, almost weekly.
Yeah.
Within my leadership team, and certainly with our stakeholders. And we want to think about how we build our line, good, better, best, from a price architecture, and that it's clear to the end consumer. And this is where they've got more information than certainly we had today, and it's being exposed much clearer to the end consumer. They've got a lot more choice. So having flexibility around supply chain, having flexibility around your go-to-market strategy, but you have to treat pricing like a trust decision with the consumer in mind, as opposed to a pure financial decision.
David, could you step outside your role for a second and talk about dynamic pricing strategies, even in the QSR, just from a consumer perspective? Like, how do you, we got AI, we got machine vision, you can put a ton of data in a QSR place and you can have, stories of they can go up, down, or sideways in pricing. How do you fundamentally think, Billy's talking about trust, do consumers... I think it's eroding a little bit when the pricing moves a lot, but maybe I'm wrong. Maybe consumers are happy to have. I don't really even remember how much that thing was.
Pricing is very strategic for both the customer and for the brand, the vendor, the product. It also has different consequences over time. There's a short-term consequence where you lower your price to sell a lot of volume, you do that. There's the long-term consequence of the erosion of brand value, as Billy was referring to. And not everyone can play this is an important thing. It's not an option available to all companies and brands.
Sure.
And the reason for that is, if you're a luxury brand, you really can't afford to promote trade, and that's going to crush your brand. But beyond that, whether you're publicly traded, private equity funded, or totally private funding, you may not be able to afford to play that game. And I hear companies use pricing as a strategy, and I go, you can't afford to not raise prices. Because if you take that margin hit, you can't report that to your shareholders and your stakeholders, and you don't have the balance sheet. I mean, one of the nice things about going to our company is we have a very strong balance sheet. So we get to determine on a given product, surgically or brand, if I hold price, I can gain market share.
Right.
I may lose contribution margin in the short term, but gain in the long term. I can afford to play that.
Right.
Other brands, other products, maybe I want today's market share, or I just want the margin dollars.
Yes.
And so it's a tricky thing to play.
We used to, earlier in my career, we used to say you can't eat rate. You can, you eat dollars. And so certainly if you're going to take the margin hit, you got to get paid for it, because your rate's going to go down. You need the dollars to come up. But the one thing that, I'm not a lawyer, I don't play one on TV, but you talk about dynamic pricing, Michael, and you talk about, algorithmic pricing. There's a lot of legislation at the state level, which for a retailer creates massive exposure. And there's a lot of nuance in that, if I send you an email, which is a reward for you that you can use, and I don't offer it to Steve, algorithmically, I've rewarded you, but not Steve. Therefore, that's algorithmic pricing. So even some of the early direct marketing tactics that you might use, that whether it's through trust or transparency and consumer confidence, there's legislation that's brewing that's going to make that even harder. And so that's why I keep coming back to that clarity and consumer trust.
Two things I'd add to what Billy just said. First, Cy Sims used to say, an educated customer is my consumer is my best customer. Today, they're very educated because it's really easy to see that. So the customer effect on how they see your dynamic pricing. But on the legislative aspect, and I also don't play a lawyer on podcasts or TV, is if you've got your product in a variety of distribution centers, and you can deliver from one center to one customer at a lower cost than you can to another, can you price it differently? There are retailers that are playing that algorithm.
Absolutely.
Yeah.
And maybe that's beneficial to the consumer because, hey, you live nearby, I can deliver this at a lower cost, you get a lower price.
Right.
On the other hand, how does state and national regulation look at the fact that different consumers on the same day are getting different prices for the same product?
Yeah.
So technology, again, driving some of this optionality.
Sure. Well, speaking of legal issues, we are required by law to ask a question about AI, and so we have gotten to that portion of the program. And as we, I've got lots of people have started to say you can't spell retail without AI. I also point out you can't spell failure either.
Ow.
But I guess
there are other words we could choose, but those are two of them. Yes,
there are. Yeah, we could do a whole sailing thing. But anyway, what I want to get at is let's talk a little reality from your worlds in terms of what's working, what's not working, and some of the challenges of deploying any forms of AI, Gen AI, SEO, GEO, MOUSE, whatever. Billy, you want to start us off?
Yeah, I mean, I would say it's a journey.
You can spell journey without AI.
You can. That's a good word. Let's add that one. It's hard to separate the wheat from the chaff. We are at the Big Show. There's 43,000 people here. There's over 4,000 vendors. It's hard to separate the wheat from the chaff between what's real and what's not. But I think most importantly, as a consumer of these solutions and within our organization, AI doesn't fix like broken models or broken solutions. It exposes them. And so we have viewed it kind of in three different tracks. One is around the experience, one is around the analysis, and one is around, I'll call it brand. And they're each at different levels of maturity. So from an experience standpoint, fairly far ahead and has been utilized within CX and in other areas around personalization for years. When you look at analysis, there's increasing use of it. It's informing decisions. As a brand, we have to say, do we want to let the AI model make the decision?
Right.
So at what level do we want to provide autonomy? And then from a brand standpoint, how much, whether it's creativity or a creative process, do we want to utilize? So if I were to say from a maturity standpoint, fairly mature, emerging mature, and then early stages. And we have a task force, it's cross-functional, people participate. We built it bottoms up as opposed to top down, although I'm the sponsor, because we wanted to ensure that as an organization, and we have a fairly young employee base, so they're using solutions. We want to keep up with the consumer. And it's I'm not at the point where I'm saying, how did you use AI to prepare for this presentation, but that's probably coming, or this analysis or any of these others.
I agree with everything that Billy just said. And I guess just to add to the question that you asked, I look at AI as, is it accountable? No, someone has to be accountable, and we don't allow it to make judgments. We allow it to give us information.
Sure.
It's certainly incredibly productive and efficient at creative asset creation, copy, images, optimizing certain platforms and performance. We have two tranches. One is what we call everyday AI. We just rolled out an AI to 1,200 associates to use bottoms up the way that's effective for them. We're giving them the tool, we're giving them some coaching, but you use it in what you need, whether it's every day, every week for drafting an email, summarizing a report, analyzing, creating, that's up to you.
Right.
And then we have game-changing AI, which is how do we create a competitive advantage based on our data and using AI to help our customers, both retailers and consumers. And that's more top-down, right? And that's many millions of dollars of investment and time and energy, and we're still developing that kind of a tool. Probably that's going to involve sophisticated supply chain and inventory management.
Sure.
The idea of being able to have the right inventory at the right time, at the right place for the right customer, and flowing that through the system. So that's where there's going to be a big AI.
I think that 100% what David said, spot on. And I think he even used the word tool, which I think is really the important piece, that AI is it's a power tool. But fundamentals are the blueprint. So how does it enhance, improve, coming back to my comment around speed, how does it expedite decision-making, all of those other elements are enablers driven by AI. What we didn't say was, transacting through, a agentic or, any of the chat platforms. That's early stage. That's very early stage. And so certainly something to keep on your radar screen, have conversations. What does it mean architecturally? But in terms of moving the needle today, That's where I think how you embed it into your organization creates optionality for the future.
And Steve, I take a contrarian position on GAI and GEO and some of this in terms of shopping. Not that it isn't going to be effective. It's too early. As Billy said, it's early days. We don't know. Let's see what it's going to be. It's not the metaverse, but it's something beyond that. Okay, but
What's that?
I don't know, yeah, exactly. I don't know exactly where it's going. But I don't think it's revolutionarily new. I think we've always wanted to drive relevant customers to our products. And whether that was outdoor advertising in print and newspapers or radio or television or internet or social media, this is just another technique of, at the right time and context, getting a customer to engage with your product. Mm-hmm. And whether it's making some of that process easier and reducing friction or not, it's still a battle for eyeballs and getting customers there. Sure. So I don't think it's a totally different concept. I think it's an efficiency method of getting there. Your local Macy's was a dry goods store down on 18th Street, and the proprietors knew the customer and showed them what they needed at the right time.
Yeah, same.
That's what
same
this is
concept.
doing.
Right. Yeah.
I want to talk a little bit about disruption, kind of last question before we get to a lightning round, pass the mic back to Steve. So if we think about the COVID era of retail, I think about organizations, and what I heard a lot of is we really have to pivot to agility. We learned resilience for the team, and I heard from a lot of executives, I wish I could capture that speed of decision making the way I did. So that kind of, informed, I think, organizations since the COVID era. Now we're in a different era. Let's call this another tranche of era with the AI and the advancing technology. Hey, Billy, start with you. How do you prepare and how do you think about leadership in this next major disruption and what we do for a living?
I'd like to say that, during COVID, growth masked a lot of, I'll call it, operational challenges. That when you get into a normalized environment, as we've been the last 12, 24 months, that focusing back on fundamentals and execution is separating winners from losers. And so that means, fewer bets, greater clarity, increased accountability within organizations. And so you move from this like consensus leadership to the clarity of leadership, and from these vision decks of what you want to create to really operational cadence. And there was a Harvard Business Review article with the former CEO of Intuit, and he talked about leaders who operate at a detailed level, not just operating at
10,000 foot level or whatever. Exactly. Yeah.
And he talked a lot about like what separates the winners from the losers is how the leaders create process. Not that they're telling people what to do, but how they create the process for work.
Oh, that's interesting.
And so I think, when you step back and you look at winners and losers and who's taking share versus holding or losing share, I think that strong operators who used COVID to make investments, certainly, but to build resilient processes and scalable processes, that simplified go-to-market is unlocking speed, and as a result, they're being more responsive. And so it sounds trite, but I would say execution today is very much the new strategy. How do you test? How do you learn? How quickly? So having that is critically important, but how you execute day to day, and how you make decisions quickly, how you, if something's not working, how quickly you can move out of that onto what's next, as opposed to, I've got an 18-month problem I got to work through. That's a death knell in today's market. And so I think the degrees of freedom are much narrower, and the companies who have clarity around that are the ones that are winning and taking share.
David, is there a freedom in that? Steve often says, not taking risks is the riskiest strategy of all, and what Billy's describing is this collapsing of the frame, of the lens. So, my lens isn't, well, let's try this for 3 years and see if it works out. Do you think in similar terms?
I don't know that it's a narrowing of that capability. I think it's providing operational guide rails. Here are standards and here are guide rails that we expect our teams to use. Delegating and allowing and enabling that responsibility, empowering your people to make those decisions within those guide rails. So you've got this, you're not going outside of this. And I think one of the things we lack a lot is everybody's got a to-do list, but Warren Buffett very famously said, what you really need is a not to-do list.
Very good.
Okay, and I think that when you're going to empower people, you have to go, here are your guide rails, and here's a not to-do list. Within this structure, go ahead and make decisions. And then you need an organization, because if you're really empowering that way, they're going to make mistakes. There has to be, you're not going to punish people for making a mistake. There can't be a negative consequence for following those. Now, you do it if you make mistakes over and over again without enough wins, that's a whole other story. But you have to be allowed, being given the permission within that structure that Billy's talked about, to make an error and then keep going and next time be successful.
And I think that it's the discipline over activity element. It's it's still having the confidence in making bets, but most importantly, the famous adage, you can't predict the future, right?
You can't.
You cannot. You can try.
Predictions are difficult, especially about the future.
Yeah. You would definitely know. But the key is, how do you respond faster to it?
Right.
And I think that's the element that organizations that have built a more responsive, as opposed to a very rigid structure, those are the ones that...
One of the things we did to enable what Billy just said is we lowered the number of people who are allowed to say no.
Interesting.
Because if you're too bureaucratic and too many people have that option through, it's only a couple of people that can actually say no.
Yeah. I often say step one is eliminating the department of no if you want to make any any progress. Okay, we're coming up on our time. I want two lightning round questions. So if you could be relatively concise, but a little bit of an explanation for your choice. So one is, this is the Remarkable Retail Podcast. We try to keep track of retailers that we think are truly remarkable. Is there any retailer on your radar screen that perhaps you think people might be talking about in a year or two, but maybe don't know so well? David, anybody?
Maybe talking. Well, we love all of our retail partners, right? So throughout the entire spectrum globally. One of my favorite retailers, which is not new, some people talk about it, but most don't, but should talk about them more often, is Tractor Supply and their CEO, Hal Lawton.
Yeah.
2,400 stores, opening 100 stores a year. And Billy, I just was in Nashville and listening to some of their discussion. 2,400 stores with profitable four-wall contribution.
Novel concept.
Okay, novel. Wow, right? Interesting idea. So I think that they have, they're going to be on the radar more a year from now.
Okay, fair enough. Billy?
I'm always fascinated. There's a company called Oddity. They're a portfolio company, and they use data to kind of build and launch new businesses. They're publicly traded. And they've built a sensing kind of development model. I'm always fascinated by what they have built and how quickly they can build and develop and deploy concepts to market. They've got a couple brands in the market today. I think it's one that doesn't get discussed very often. It's a very interesting, kind of holding company business model that drives innovation. There's a lot to learn there.
Okay. Well, sometimes we use this question to source future guests, but Hal's already been on, but Oddity has not.
I did not know that Hal had been on.
He had actually. Okay, last one. Quite a few turnarounds of iconic brands going on. Who would you handicap as likely to show some real traction on the turnaround, and maybe one where you're going, I'm a little bit more skeptical? Billy, how about we start with you on this one?
The one that people talk about most frequently is probably Gap and what Richard Dixon has done within that organization. There's a tremendous momentum internally. My daughter just the other night had mentioned Gap, and she's never mentioned previously. She's 21 years old.
So long on Gap, maybe short on... These are not. We're not giving investment advice, just to be clear.
Yeah, I think businesses that have struggled, that maybe have been bought by private equity in a couple different ways of trying to resuscitate, whether it's the Express, Bonobos, that group. I'm a little jury's out. Certainly, it's hard to resuscitate businesses that are especially troubled. Chapter 11 is certainly not Chapter 7 liquidation.
Yeah.
But going back to my consumer trust and speed,
Sure.
the consumer moves on very, very quickly.
Yeah, and probably the balance sheet.
No
stuff
doubt.
that you talked about. All right, David, who long, who
I
you
don't know
short
that
on?
I'd call this a turnaround, but let's see what happens with Target over the next year. I think that you've got new leadership coming in. They have 1,800 stores out there. I don't want to look at them as a negative spiral that they're in. I think that can be turned around, and I am cautiously optimistic that they shall do so. So that's my turnaround.
Can I add one more? They're not public. I think Nordstrom as a private company is taking more risk than certainly they did as a public company.
Full line or rack?
Full line.
Okay.
And they're trying things.
Yeah.
And they're taking a little more risk, and they're trying to be more forward-thinking. And when you think of what's happening in the luxury or near luxury space, I would, kind of watch this area. I think that's they're going to end up in a much better place.
All right. Fair enough. You don't have anybody you want to...
Yeah, I'm not going
more
to pick a
cynical about?
specific retailer, but I'll give you a channel, okay? And I think this is not new. This predates even COVID. We're going back to what's the future of the department store?
Yeah.
A multi-branded, mid-tier, right, multi-product store. It's not going to go away. Customers, let's take the apparel space. There has to be a place for a customer to feel, experience, try on, and get views of what apparel is. You can't do that at Walmart. You can't do it at the off-price channel, and you can't do it on Amazon.
Right.
And you're not going to do it at Costco, some of the winners that you talked about.
Yeah, sure.
There's a need for this. It's not just vertical. I want to try different brands on, not just, vertical retail is a whole other story. But this is where the department store was created and where it lives. Someone has to reinvent that successfully. And I will tell you, I think Tony Spring's doing a good job.
I would agree.
All right, at Macy's now, but he's shrinking the business. We're going down from 800 to 500 to 400 and 300 some odd stores. So
Eventually you could have like 3 really amazing stores.
that would be called Bloomingdale's, okay, which is what Tony has. Right? So, yeah.
Coincidence?
But somewhere in that space, there has to be leadership that grows, and Michael knows, where do you do that in Canada now? Where do you, with the Bay gone?
We look to Le Maison Simon,
Okay.
who just opened took up some Nordstrom space. So actually, they're doing a good job.
Well, you have Harry Rosen, and you've got
Rosen's undefeated, right? Many people have tried to take them out.
But that's very high end, right? I'm looking at mid-price.
Simons.
Right?
Simons
is more in that space.
Simons fits
So
right
I
there.
think that channel is challenged dramatically, but there is a consumer need for success, and that's one that we should all keep an eye on.
Well, gentlemen, one of the reasons I continue to and love doing this is I get to talk to people like you. So, I'm blessed to be here with you together and just having this great conversation. So thank you both for joining us here in the Narvar podcasting studio on the NRF show floor. A real treat. Every time we talk, I learn something. So thanks. On behalf of Steve and I, thanks again so much for joining us.
Thank you for inviting us. And by the way, a congratulations to Billy, who is now a board member of the NRF.
Thank you very much. Thank you.
A brand new board member, and fourth generation in retail. So congratulations.
And thank you very much for that. And I'd be remiss if I didn't mention that I'm not only a fourth generation retailer, I'm a second generation member of the NRF board. My father served almost 30 years ago.
Wow.
Wow, all those people around us just cheered.
I know.
Incredible. I travel with my own cheering squad. But yes, very humbling. And equally, not just as the only direct-to-consumer brand, kind of on the board, but as a digital executive who's kind of grown up to be among Hal Lawton at Tractor Supply and many of the other large retailers, it's a different perspective. So
Sure.
I'm glad to serve.
All right. Well, thanks, gentlemen. Once again, look forward to seeing you at the next gig.
Thank you very much. Thank you, guys.